Welcome back. Tonight, we're breaking down the stocks, making headlines, and the real stories behind the numbers. From Washington's influence on rare earth miners to the wild swings of meme stocks, the market is in constant motion. We'll spotlight key players, from tech giants boosting utilities to miners navigating disasters and upgrades. My goal, cut through the noise and give you the context you need to understand what's moving the market and why. We'll dig into filings, CEO statements, and analyst notes to reveal the forces shaping today's trends. Let's get started. First up, USA Rare Earth surged 8.8% after its CEO revealed direct communication with the White House. This isn't just PR. When a rare earth miner signals a close relationship with Washington, investors pay attention. Rare earths are essential for everything from smartphones to defense systems, and the U.S. wants to secure its own supply. A domestic supplier like USA Rare Earth becomes a strategic asset, not just another mining company. The phrase close communication hints at possible government support, contracts, funding, or regulatory help. Investors are betting this relationship will clear hurdles and fast-track the company's growth. The stock's jump reflects a belief that USA Rare Earth could become a key player in America's resource independence. This is a prime example of how geopolitics and business are increasingly intertwined. A company's value now depends as much on its strategic alliances as its financials. For USA Rare Earth, this is a pivotal moment. Government backing could turn potential into reality. The market is watching for concrete action, contracts, funding, or policy shifts. The 8.8% gain is Wall Street's early vote of confidence in this unfolding story. As the U.S. pushes for resource security, companies with a seat at the table in Washington stand to benefit most. For investors, this is more than a mining play. It's a bet on national strategy. The White House connection is just the beginning. The market is eager to see what comes next. GameStop, the original meme stock, dropped 2.7% after a cryptic regulatory filing. The company announced plans to sell a mix of assets, stock and debt, but didn't specify how much it aims to raise. This lack of detail spooked investors, raising fears of dilution. If GameStop issues a large number of new shares, existing shareholders' stakes shrink, hence the sell-off. On the plus side, this move gives management flexibility to raise cash for acquisitions or transformation. But it also signals that GameStop still faces an identity crisis, struggling to pivot from brick and mortar to digital. The meme stock phenomenon adds volatility, with sentiment often outweighing fundamentals. Management may be capitalizing on the stock's elevated price, but uncertainty breeds caution. Without clarity on the offering's size or purpose, investors are wary. The 2.7% drop is a reminder. Behind the hype, GameStop is still a business making tough financial decisions. For now, the market wants answers. Until then, expect more volatility. The meme stock saga continues. Applied Materials fell 2.2% after new U.S. export restrictions hit its semiconductor equipment business. The company warned that these rules will cut $110 million from fourth-quarter revenue and $600 million by 2026. This isn't a one-off. These are sustained headwinds that will reshape the company's growth. The market's reaction is a direct response to this new reality. Applied Materials sits at the heart of a global supply chain, and policy shifts in Washington have immediate, costly effects. The export controls mean lost sales and a need to find new markets or innovate around restrictions. For investors, this is a clear example of how geopolitics can hit the bottom line. The company's technological edge is now weighed against the drag of government-imposed limits. Applied Materials has become a bellwether for the impact of tech trade wars. The numbers are stark, hundreds of millions in lost revenue, and a tougher road ahead. The 2.2% drop is the market recalibrating risk. Investors must now factor in policy uncertainty alongside business fundamentals. For Applied Materials, adapting to this new landscape is the next big challenge. The story here: policy decisions can instantly reshape a company's future. The market is watching who adapts and who gets left behind. Uranium Energy dropped 2% after announcing a secondary offering of 15.5 million new shares. Issuing new shares dilutes existing ownership. Think of slicing the same pizza into more pieces. Goldman Sachs is underwriting the deal, signaling institutional interest, but dilution is still dilution. Why do it? Mining is capital intensive. and the company needs cash for acquisitions, exploration, or upgrades. The uranium market is hot, with nuclear energy back in focus as a climate solution. Uranium Energy is raising funds now to capitalize on strong fundamentals. For investors, the short-term pain of dilution is weighed against the potential for long-term growth. The real question: can management turn this new capital into value? The 2% drop is a textbook reaction to dilution, but if the company invests wisely, today's dip could be tomorrow's gain. In mining, timing and execution are everything. The market will be watching how this capital is deployed. For now, it's a wait-and-see game. The next move is up to Uranium Energy. Entergy, a utility company, rose 2% after landing a major deal with Google. Google is investing $4 billion in Arkansas, including a new data center in West Memphis. Entergy will supply the massive, steady power these data centers demand. For utilities, a customer like Google is a long-term, high-quality revenue stream. The deal signals stability and growth, reducing risk and boosting investor confidence. This partnership highlights how tech investment drives demand for traditional infrastructure. Every cloud upload or AI search needs electricity. Entergy is the silent partner powering the digital world. The Google deal also puts Arkansas on the map for future tech investment. For Entergy, it's more than one contract. It's a signal to other tech giants. The 2% stock bump reflects the market's appreciation for predictable, growing revenue. Sometimes, the best way to play tech trends is through the companies enabling them. Entergy is now a key beneficiary of the digital boom. The story: big tech's growth fuels old world winners. For investors, it's a reminder to look beyond the obvious. Entergy's future just got a lot brighter. Zillow rebounded over 1% after Gordon Haskett upgraded the stock from hold to buy. The firm argued that Zillow's recent 17% drop was an overreaction to competitive and legal fears. The real estate tech space is crowded, and lawsuits over agent commissions have spooked investors. But Gordon Haskett believes the sell-off has gone too far, creating a buying opportunity. Their call: the market's fear is now disconnected from Zillow's fundamentals, brand strength, and user base. This is a classic contrarian move: buy when others are fearful. The upgrade sparked a pause in the negativity, with some investors jumping back in. For Zillow, it's a much-needed narrative shift and a potential floor for the stock. The legal and competitive risks remain, but the risk-reward profile has improved. The 1% gain may be small, but it could mark the start of a turnaround. Sometimes all it takes is one upgrade to change the story. For now, optimism is creeping back in. The market loves a comeback. Red Cat Holdings, a drone tech company, jumped 4% after Needham initiated coverage with a buy rating. Needham predicts the drone industry is entering a supercycle, a decade or more of rapid growth. Red Cat is well-positioned, with products serving both commercial and military markets. Their Teal Drones unit is approved for U.S. Department of Defense use, a major advantage. The drone boom is driven by demand in agriculture, construction, logistics, and especially defense. Needham's endorsement brings new visibility and credibility to Red Cat. For investors, it's a signal that the company could capture a big share of this growth wave. The 4% stock pop reflects excitement about both the industry and Red Cat's role in it. When analysts spot a supercycle, investors take notice. Red Cat's challenge: execute and scale as the market expands. The Needham buy rating is a milestone and a catalyst for new interest. For Red Cat, the sky's the limit. The drone revolution is just getting started. Freeport-McMoRan, a copper and gold giant, gained over 1% after UBS upgraded the stock to buy. The upgrade followed a sharp sell-off triggered by an operational crisis at the Grasberg mine in Indonesia. A deadly collapse forced the company to declare force majeure, halting production and spooking investors. UBS argues the market overreacted, pricing in a worst-case scenario for mine recovery. Their view: the sell-off has created a value opportunity, with upside if Grasberg recovers faster than feared. This is classic contrarian investing, buying when panic has overshot reality. The upgrade gives investors cover to re-enter, betting on Freeport's operational expertise. The 1% gain signals a shift in sentiment from disaster to recovery play. For Freeport, it's a welcome boost during a tough period. The narrative is changing, from crisis to comeback. Investors are watching for signs of a turnaround. Sometimes, the best opportunities come from overdone fear. That's our look at tonight's market movers. From White House partnerships to tech-driven utility wins, the stories behind the numbers matter most. We've seen how sentiment can shift in an instant, and how overreactions create opportunity. The market is a living entity, always recalculating risk and reward. My job? Bring you the facts and context so you can make informed decisions. Thanks for watching. I'm Creator's Name. See you next time.